It's Goldman's Dire Warning. I'm your host, Steve Van Metre, and thanks for joining me today. And as we get into the charts and technicals of the market, Goldman is warning investors that the machines are coming and they're going to outright get crushed once they start triggering. I want to show you how that's going to happen and why investors are completely mispositioned for what's about to happen. Let's over to Goldman, where we pick up today's story with their tactical flow of funds for January. And here they note that the biggest theme of where investors are is they're going into cash. Look at this. Money market funds added $112 billion worth of inflows this past week, the largest weekly inflow since April of 2020, which was considered the peak of cash during the pandemic. So you're seeing now everybody flood into cash. And now let's start to look at how the machines are positioned and where they're going to trigger, because you're going to see just exactly how investors are going to get crushed. As we look at the expected flows in different scenarios, just from Goldman, they note the S&P 500, if it just trades flat, meaning it goes sideways, there's going to be minimal selling over the next week. If stocks rally higher, they're not going to do a ton of buying yet. The triggering comes a little bit later. And if stocks take a big drop, well, we're only going to see a little bit of selling, meaning the computer models aren't positioned to sell. And even over the next month, there's a minimal amount of selling on a flat tape, even less amount of stocks go down. But a big buy, you see here, $42 billion if we see a 2 standard deviation move to the upside. How about tech stocks? Well, you're going to see minimal movement there as well because they've already sold off. And that's the key point now. As you see how investors are positioned, they're racing into cash and the machines aren't ready to buy just yet. But wait until they do, and then we're going to see a big shift. By the way, I want to mention we do have a sponsor for today's show, and at the end of the show, I'm going to give you 7 reasons I'm adding to my portfolio and why you may want to consider that as well. Plus, many of you have been asking, when are we going to have a place where we can go and follow up on these stocks and keep track of them? Well, I've got some big news on that. Again, stay tuned till the end. Here we can see the largest owner of the equity market, retail investors, now has become the largest seller as retail supply has accelerated after the new year as they're dumping Tesla, Apple, Microsoft, and even Amazon. And of course, Goldman's now suggesting that based on their data, retail has now fully unwound all their post-COVID trades completely in tech. And so now you see they're bailing on tech, they're running to cash, and we're starting to get the big picture story here. Let's dig a little deeper. The corporate blackout window ends on January 27th. That's about 3 weeks away. 75% of U.S. corporates are currently in their blackout window, and we're right now in the middle of peak blackout. And here you can see the systematic CTAs, they're not going to flip to big buying until February. So think of this, post-FOMC meeting, you're looking here about a week later, they go into a big buy position, and now you're starting to see how investors are going to get crushed, because getting crushed doesn't imply that you just take a big loss. It could be the other way around, that the market starts to rally higher and you're sitting in cash watching it go up, and all of a sudden your returns, and at least comparably, are getting crushed compared to the broad market. And that's why we see investors misposition. And now let's dig deeper into the machine positioning, because we'll start out with Metre here. And if you're new to the show and you're wondering why is this blurred out, well, because it's proprietary information and I can't show you the data. I can give you suggestions to say that Metre is ramping up to strong long positions. How about TD Securities? Well, they're still short the market. You can see that in these green bars shifting to the left. They are indeed short on their equity positions. And here's what we've talked about in the past, that the S&P 500 failed at its 200-day moving average. That was a key point. I said it was likely to rally back up to it. Right now we're looking at 3950 on the S&P to see a stronger signal from the CTAs to buy, under 3700 to sell. Now let's take a look at the momentum of the S&P 500. So here we can see momentum is positive, at least, well, for a day. The RSI is over 40, sitting at 51. That means momentum from the relative strength indicator is positive. MACD is still slightly negative, but look for it to make a positive cross pretty soon. Momentum Timer Pro showing one consecutive daily buy signal. I'm saying no position on this right now. If you're looking for a trade, and again, you start to look at how the machines are positioned, just hang tight on this one. Friday closing at 388.08. Next upside target is 393. That's where I want you to look and keep an eye out. If you start to break through up in that range and you see the CTA start to jump in, that's where you want to be buying. Next downside target, we'll look at that, is around 378. You see for Momentum Timer Pro subscribers, we see where to sell max on the 1 month. So again, we note reversals tend to happen there, but the 3-month window is still at a buy mid, so that's good. We see longer term momentum is still holding up. The 6-month window is still at a buy minimum, so we're looking for the short-term move to start to reverse. We only have 1 day on that. It's too soon. How about the CTA-Timer Pro? My version of what the machines are doing. Again, as soon as I get done with the guidebook, the price on this goes up. But notably on the fast version is showing a minus 15% short, and they were selling into last week as we close out the week. When this starts to reverse, you see momentum building. You've got confirmation of where you want to jump in. On the slower signals, they're still long. Let's take a look now at the charts of the S&P here and see what we've got. And what we can note is I want to see kind of a rally up into here. And notably, this is happening during the blackout window. And then that's where I want to see the machine start to trigger into this lower range from a trade perspective. That's where I'd want to look to be buying on it. And then particularly a break of the 200-day moving average. We know to the downside, it's been pretty solid. Support has been very strong right here around 378. So if you're looking to make a trade on this, just hang tight. I think we'll get some confirmation here really soon. Let's take a look at the NASDAQ here, QQQ. Momentum is negative. The RSI is positive at 46, but everything else still negative. The MACD is negative. Momentum Timer Pro, 15 consecutive daily sell signals. Again, holding no position on this one from a trade perspective. I'd wait for this to reverse. Notably, we've got a 1-month sell max signal still, so I'd wait for this to start to reverse. And well, since it doesn't even have one buy signal yet, but look at the CTA position here from the CTA report. Max short on the fast signal, minus 55% short on the longs on the slow signal. Again, look for some reversals here and then start to say, okay, I'm seeing momentum build. I want to get in there, because looking at the NASDAQ, you've got 1 bottom, 2 bottoms, 3, 4 if you really want to count all of them, and that is holding up nicely, forming support. You want to see this rally up. Look at the 6-month volume profile. It's going to match right nicely with the 100-day moving average. So you want to see a move up into this supply zone, and then you want to take a position coming out of that. Unless you really want just to take a short-term flyer on this, you can do that, but I would kind of wait and let kind of the triggers to start to happen to validate that this thing's moving higher, which of course I think it's going to pretty soon. All right, let's take a look at how the machines are positioned in the bond market. Here's a big opportunity. We look at Nomura, max short on bonds. We look at TD Security, heavy short on bonds. And here's what I've updated this now. It used to say 3.1%. Watch the 10-year. You start to get now below 3.4%, and you should see some rounds of short covering there. Let's take a look at iShares 20-plus Treasury Bond ETF TLT. Momentum's positive. RSI is great. It's at 56. That's nice. It's above 40. The MACD's got a negative cross, but looking to flip over. Momentum Timer Pro has got 1 consecutive daily buy signals. From a trade perspective, we're noting no position. Wait till the 1 month flips to a buy max, or in this case should be a buy minimum, because I forgot to update that. So here you see sell minimum on the 1 month, buy minimum on the 3 month. Wait for this window to flip. There's where you want to take the position. You want to see a breakout over 107, 108, with a downside target being 99.81. Notably, I ran the overlay on the ETFs. Those subscribing to the CTA report get how the machines would look at the ETFs, even though they don't trade them. You see on the short term there would be max short, long term still holding up. So watch for this to move, and then you've got some validation. Let's take a look at the chart. And here you can see exactly what we're looking for, that 6-month volume profile holding up nicely on TLT. We mentioned this to our pro subscribers a few days ago to put this on your radar to watch if you start to get a break over this. You want to build into it. Here's the resistance. You really need to see this break right up here around this 107 and 108. Want to see breakout over there. It may get rejected at the 200-day before we see a breakout, but what you're seeing is a nice setup of a move higher, and you can see the trend building in bonds. Let's talk about gold, because we also made a call to our subscribers and on this show, they need to be buying gold, and we can see positioning is the machines out in Omer short, TD Securities short, and what you want to see, move over 1850, what we notated the last time we did this show. That means look for buying on Monday. We see the trigger points were hit on Friday close. That should indeed lead to a move higher in gold. Let's take a look at gold futures here. And what do we see? This thing is just moving in a breakout. We said this was likely to happen, and you see move to 1900. I think the initial move, you could get a little bit higher up here, right around say 1880, maybe get some rejection there, or 1875. We've seen that happen before, but you've got a nice room to run up 1900, and you start to put this in perspective. If the machines start to short cover here, well, now you're starting to put some real momentum to the upside in gold, and that takes miners higher, takes those resource plays higher, and then you've got the big picture. Well, now I want to introduce our sponsor for today's show, and that's Vuzix. They're an augmented reality company. Let's take a look at them, because as we know, this sector is looking to explode, and they're one of the industry leaders. Stock symbol is VUZI or Vuzi. Let's take a look at this. We're going to get a little deeper, because this is an incredible chart opportunity. You're going to love it. That's why I wanted to do it on the chart show, because it's going to blow you away. Let's talk about the first two reasons as we dig into the charts here real quick. They're an augmented reality company, and this is expected to explode from a $1 trillion industry to, or $1 billion to a $1 trillion by the end of 2020 or 2030. They're an industry leader in the manufacturing, marketing, and sale of optical components, waveguides, smart glasses. We know that is likely to be big, and augmented reality solutions also expected to be huge. Analysts are suggesting this thing could get up to $15, currently trading under $4. If it were to do that, and we're not saying that it's going to happen, but if it did happen, you're talking a nearly 300% return, which is rather incredible from this small stock. Now let's take a look at the technicals of this, because I know this is what many of you love. You're looking for opportunities. Let's start with the chart over the last 6 months. You can see it's gone from a high of almost $10.50. It's now sitting down here just under $4. And now let's look at the opportunity from the relative strength indicator. Look, it was oversold, 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 oversold. So you see price going down, and you're seeing the RSI start to trend up on this long trend going from oversold. And that's exactly a signal you want to see, is momentum building as price goes the other way, because it suggests price is going to then likely turn higher. You can see the MACD is kind of just bouncing around, but moving upward as well. Also going from a deep oversold position, moving higher. And what can you see? Volume profile sitting at $5. So you'll note that's where a lot of people have been selling. You see a move up to that and eventual breakthrough. I'm going to tell you why that's going to be a big deal, because there's a lot of people short this stock. But that's not just the story. Let's zoom into the 10-day window. And as you know, we love to talk about volume profile on this show. And here you can see buying coming in over the last 10 days, all underneath, putting some support here on a potential trade, looking to make that move up to the upside. But how about the big picture? Well, let's look at the weekly chart, because now you're going to get excited, just as I am. And what I want you to see here is you see periods where this thing has been deeply oversold in the past, and then stock went down and went oversold again, and then skyrocketed higher. Well, look what you see now. A big move down, got to oversold territory on the RSI. It kind of bounced out of that, just like it did before, came down and is darn near oversold again. You'll notice on the weekly volume profile, most of the buyers are sitting just above this level. So that means that people that previously bought here are going to be looking to buy again, because they know and they're hoping there's going to be a big move to the upside if they can squeeze this higher. And then look at the MACD. You see it was massively oversold, rallied up, couldn't break out of that, pulled back again. But notice the trend, and the MACD is also moving higher. And so you get this big picture story that this stock is looking to break a lot higher. Now, how high could it go, you're asking? Well, If it makes a big move, as the analysts expect, it gets back to its 52-week high, you're talking a 298% return, which would just be staggering. Take a look at this. Here you can see it made its 52-week high of $10.49 on August 12, 2022, bounced off its 52-week low on February 28, 2022, climbed 17% less than a week. So it's got some short-term play as well as some long-term play. And if it moves from its 52-week low of $30.27 back to its high, you're capping off a 220% return, just getting back to its 52-week high. And could that happen? Well, look at this. Possible short squeeze. According to MarketWatch, on January 5th of this year, Vuzix is now listed, again, symbol VUZI, listed as one of the top 50 stocks with the largest proportions of outstanding shares currently sold short. And after a historic move made by GameStop, many people are now aware of a potential short squeeze could happen. And again, you're looking at what could be a lot of people piling in to squeeze out those shorts. And you know, in the past, which we've seen this happen, we can see it in the Vuzix chart. Why? It can go vertical and has the absolute potential to do that. The shareholder base is largely institutional, holding nearly half of the public float of the stock, with Cathie Wood's ARK Investment being the largest shareholder according to Yahoo Finance. Of course, we know she likes to buy these kind of stocks and buy them when they're down. Insiders own 7.3% of its shares, and that is fairly high as well. The company has zero debt and a strong cash position. The company's latest earnings show that it's got over $90 million in cash and over $100 million in working capital and zero debt. So it makes an incredible opportunity here for Vuzix. Now you can see why I'm excited to be adding to my portfolio. Of course, I'll be looking to do that early next week. Now, I promised you an update. Many of you have been asking, hey, Steve, is there going to be any follow-up on these promotions? Is there any way we can be engaged with you and your research on them on an ongoing basis? Well, we put together a proposal to my compliance team using the Teachable website and said, look, this is how it's going to work. This is how it's going to look. I put a mock plan up for them to see. And of course, my goal is going to be completely free to you, which is fantastic. So whether you're trading these or not, or just want to follow along, no problem. They gave it an initial look and said, hey, we really like this. We're going to dig deeper and make sure it's okay. So we're hoping in a couple of weeks, you'll be able to get even more research on these and follow along and know what I'm doing with my personal portfolio in these stocks so you can stay in touch. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.